How to improve trading psychology. The cycle of trading doom. When you trade the market, it's all indicators, strategies, and platforms. Find a system that works for you, you're told. One that suits your trading personality, they say. Test your way through an approach, manage your risk, and protect your capital. None of this is wrong, after all. We preach this stuff at the Money Lab every day. The thing is, it's only half the picture. It's just not the full story. No matter the course I've attended, the numerous traders I've spoken to, or even the pros I've worked with, none of them ever raised this silent killer that I'm talking about. Seeing as it takes down so many traders, you'd wonder why more traders don't mention it more often. Well, the experienced, consistent, and ultimately profitable traders do, which in itself tells you something. So what exactly is this silent trading killer? I'm talking about trading psychology. It's the way you approach, think about, and more importantly, how you feel about the market and your trades. Your psychology affects your behavior in the market, which in turn affects your performance. If you repeat the same trading behavior, it's natural to say your performance won't change. And depending on how destructive that behavior is, things could go south pretty quickly. Just ask any new trader tackling the market for the first time. Apart from the technical stuff, entries, risk management, etc., it's what really matters in trading. You could have the best system, one that suits you down to a T, but if you can't hold your nerves in the markets, or you let your emotions get the better of you, well then you're a goner. If you honestly believe that you can't change your performance without changing your trading behavior, then you've been approaching the market all wrong. However, if you understand that your trading behavior is the key to your success, and at the very core of what matters in your trading, then half of your battle is already won. Most traders are held captive by their emotions. I even call these the 7 deadly trading sins. They chase bigger positions, gluttony. They revenge trade, wrath. They chase trades and profits, greed. They hold on to losses, sloth. They hide or ignore losses, pride. They overtrade, lust. And they even covet other people's trades, envy. There's a reason emotion in trading has often been called trading demons. Trading on emotion can be extremely dangerous and is more often than not advised against. You end up making decisions you normally wouldn't have made in those specific situations, as I've shown above, ultimately meaning you end up gambling at the end of the day. That's precisely where consistent traders differ from the ones that lose money. Practically executed, disciplined trades far out, perform emotion-based trades. Emotional trading often leads to traders getting caught up in the cycle of doom. It's a 3-step process most traders don't even know they're in, and it keeps traders from making money for months, even years. I'll touch more on the cycle of doom further down in this report. So if you know that your behavior, emotions, and psychology affect the way you trade, irrespective of your strategy or system, surely there's something you can do about it all to positively affect your performance? There is. In fact, there are 2 specific things you can and should do. I like to call them